Greetings everyone, wherever you are watching this video from. On today's video, I'm going to be showing you how I was able to capitalize on CPI for the first month of 2025. Well, the exact date is the 15th of January 2025. Well, as usual, I'm going to explain to you what CPI means so that you don't trade it blindly without even knowing what it means, which is how most of you trade it. Here are our agenda points. First, what is CPI? And secondly, 2 ways to trade CPI. Lastly but not least, which is the most important, when not to trade CPI. So let's jump to the first point. What is CPI? Well, it stands for Consumer Price Index. It's an inflation indicator which estimates the change in the prices for the goods and services purchased by households. So in simpler words, it indicates the average household spendings. So how do we trade it? Let's see on the next slide. Here are the 2 ways of how you can trade CPI. Well, these are not the only ways of how you can trade it, but these are the ones that I'm going to share with you today. And on this video is mainly focused on the second one. Well, let me outline them. The first one is trading the release. It's trading before the news release in order to catch the release itself. That means you're going to take your positions, you're going to execute before the release in order for you to catch the release move. And secondly, trading after the release. This is when you wait for CPI to end or to play out. Then now you can participate. Those are the 2 ways to trade them that I'm going to share with you today. So let me just jump into the charts and show you the analysis before the release. Those analysis I'm going to share, even the time you will see yourself, it was before the news were released. I already had everything planned out before the release itself. So let's just jump into the video. Here is the last point. When not to trade CPI? The answer to that is really simple, but very effective. Do not trade CPI or any news for that matter if you don't have a setup. You see, the money you are trading with is hard earned, so don't dare donate it to the markets. Most people will be saying the market is not respecting setups, the market is not in a good condition, the market, all those chats, all of them, forgive my language, but they are absolute nonsense. If you study the charts enough, you will understand, you will come to an understanding that each and every move on the market happens for a reason. And it's your job to find out. I'm not saying you should take the information I give away blindly. I'm not saying you should follow the information I'm giving you blindly. If what I'm saying doesn't make sense to you, it's okay for you to discredit it. Don't take this advice of mine if you think it's nonsense also. So it's very important to go out there and dig for more information on the charts, and you will come to an understanding of that each and every move on the market happens for a certain reason. CPI, NFP, all those news releases they play a role in a monthly chart. All of them. Well, let me not waste any more of your time. So let's jump to the video itself. Greetings everyone. I hope you're well. This is on the 15th of January 2025. As you see there, 19 minutes past 3. That's 10 minutes before CPI. And I'm going to show you my prediction on CPI. Firstly, let me begin by outlining what I think is going to happen. No, let me use the arrows. Yeah, the perf. First, I'm expecting for the price to move higher. That's when the news releases. Then later on goes lower. Then I can continue my overall outlook, which is buys. As you remember, I said on Euro USD, I'm looking for buys. So that's why I'm expecting the market to go up, then down in these areas. That's why I'll be looking for buys. The reason why I'm looking to buy a little bit lower is because right here we have relatively equal lows. We have equal lows right there. So that's where my liquidity is resting. So I'm expecting for the market to take that liquidity out before I buy. Oh, the notifications. Before I buy, let me just, let me mark it out very clearly. So that's my reason why I'm looking to buy lower. That's why I'm not buying right now. I'm expecting for the market to sweep the liquidity below there and then come here. As you see, we have a key level in this area. We have a point of interest. As our key level. I like to make it a bit cleaner, and let me put it on the middle and then right. Yes, yeah. So we have our key level there, and I'm expecting for the market to sweep the liquidity that's below those equal lows. Sorry. I'm expecting for the market to go higher, as I said, on NFP release. Then later comes downwards, and then that's where I'm going to participate. Or maybe I might even trade after the release. As I said, I might trade the retracement. As I said, that we are on my overall target is higher prices, meaning that I'm bullish, but whatever sales I'm gonna take will be retracements. So I'm thinking of trading this retracement, but I will see. Firstly, let me mark out this. I realize right here we have relatively equal highs. That's where liquidity is resting, and that's the reason why I'm thinking that, or that's the reason why I'm expecting for the market to go higher. Let me just mark them out, and then top. Yeah, so that's why I'm expecting for the market to go higher first. Well, let me show you this in a simpler form. As you see here, we have a structure similar to the one that we are dealing with right now before news is released, before CPI is released. So first off, let's always keep in mind that we are in an uptrend. So let me write it here so that you can stay updated with what's going on. And let me just say, what is my overall trend? Wait, let me just say target, because remember that my targets are higher, and the answer to that is that where is the equal sign? Oh, here it is here. So my overall target is higher. Remember that I'm looking for buys. So any sales that I will be seeing or I will be taking, you should know that will be retracements. So if you see me taking any sales, just know that I will be trading retracements on this week or until my target is reached. Let me just put it here. Retracement. Yes, sir. So let me just show you exactly how I'm expecting for this to happen. I'm expecting for the market to go higher, taking out the liquidity and tapping into a key level. Let me just make it blue so that you can see the difference. The market to sweep out the liquidity and then tap into a key level, then sweep the lower liquidity and then tap into key level again, and then I buy. So here, this is where liquidity will be taken. That's the point where I know that the market has now taken liquidity. Yes, let me just write yeah, that's where the liquidity will be taken out. And below here is the same thing. I'm expecting for this liquidity to be taken out as well. Liquidity taken out. Okay. Oh no, it's second. Sorry. In this case, it's second. So guys, this is not a pattern. I'm just reading price logically first. Yeah, as you see. So I'm expecting for the market to take out the liquidity above here first, and that's where I'll be selling until the market has reached into this key level right here, and that's when I'm going to buy and get back to my overall trend or my impulse move. I'm looking for buys, as you remember. So yeah, that's how it happens. So let's apply it to the charts. As you see, this is where liquidity is resting. So at that level, I know that liquidity will be taken out, and below here as well. I will take a video exactly after I've taken an entry. So as you see that my target has been reached, my sales have completed, which was a retracement. So this trade was taken based on a retracement after CPI was released. So basically, on the two ways I taught you, I used the second one. I waited for the CPI move or release to play out. Then the market tapped into my key level, and that's when I took an entry towards the lower side, because I knew that whatever was happening was a retracement. But now that it's complete, I'm back to buys, because that's my overall outlook. For those who have watched the video until this point, that means that you are serious about your trading. So please tap yourself on the shoulder for that, because the future you is proud of you. And here is a bit of a takeaway for you. Go and understand liquidity. Go and understand liquidity, because the market is moved by liquidity. Go and research, do whatever you can just to understand how liquidity works. There's going to be a lot of insightful information that I'm going to be sharing on this channel. So subscribe so that you can stay updated. Till next time, ladies and folks.